Are you looking for some solid advice on the best dividend ETFs? Well, then you're in the right place. I'll be going over why it's important not to invest in ETFs just because they have a very high dividend yield. I'll reveal my top 5 dividend paying ETF. And finally, I'll show you an additional ETF that didn't make my top 5, but could very well be better than all the ETFs I mentioned in this video. And what is an ETF? It stands for Exchange Traded Fund. They're a basket of investments like stocks or bonds. They let you invest in lots of securities all at once. And ETFs often have lower fees than other types of funds. They're also similar to mutual funds, but they can be actively traded throughout the day when the market is open. And before we dig in, smash that subscribe button. Your wallet will thank you. So first off, let's talk about why it's important not to invest in ETFs just because they have a high dividend yield. Many people get enamored by all the talk of high dividend yield ETFs, but many don't realize that you can't just look at an ETF's dividend yield. It's more important to consider the total return of an ETF. As an example, I'll give you a little sneak peek of an ETF that's in my top 5 and compare that with an ETF that has a very high yield to show you how much each ETF would be worth with a $10,000 investment and their dividends reinvested, which is also known as DRIP. Not like, man, this information's so DRIP, but DRIP stands for Dividend Reinvestment Plan, which is exciting to me. Now let's compare one of my top 5 ETFs in VOO, which is the Vanguard S&P 500 ETF with a dividend yield of 1.43%, and compare that with IBHE, which is the iShares iBonds 2025 Term High Yield and Income ETF. That's a mouthful. IBHE currently has an outstanding yield of 7.13%. Right off the bat, you can see that the yield for IBHE is almost 5 times as much as VOO, and many would then make the decision solely on that to invest in IBHE over VOO, but in most cases, that would not be the best choice. Let's take a look at this chart, which shows us the value of these investments after a year, 3 years, and finally 5 years. A quick note, IBHE doesn't go back quite 5 years, as it was started in May of 2019, so our 5-year comparison is really more like 4 3/4 years. As you can see, the investment in VOO outpaces IBHE by a pretty wide margin after 5 years. Well, really 4 3/4. The investment in VOO is over 50% more than IBHE. And I wanted to show you that example because I see so many people suggesting and making comments on purchasing high yield stocks and ETFs without really factoring in the returns of the investment and only focusing on those high dividend yields. Now on to my top 5 dividend ETFs. Coming in at number 5, SPYG, which is Spider's Portfolio S&P 500 Growth ETF. It has a current yield of 1.12% and was the best of the ETFs over a 5-year period, but it really struggled in the middle part of the last 5 years. So that's why it ended up at number 5. At number 4, EWW, also known as well, its real name is the iShares MSCI Mexico ETF. It has a current yield of 2.23%, and this ETF did amazingly well in the middle part of the last 5 years, and that's why it landed at number 4. At number 3, SPY. Is there a SPY in here? This is Spider's S&P 500 ETF Trust, and it comes in with a yield of 1.37%, and yes, it's another S&P 500 ETF on the list from Spider. This ETF performed well throughout the last 5 years, and that's why it landed at number 3. At number 2, I think you've heard of this one, VOO, which we used in our comparison earlier. This is Vanguard's S&P 500 ETF. Its current yield is 1.43%, and yes, once again, we have another S&P 500 tracking ETF on the list. Seems to be a theme here. This ETF performed just slightly better than our SPY friend, and when I say just slightly better, I'm talking a whole $34 better over 5 years. And at number 1, drumroll please, VGRW, which is Wisdom Tree's U.S. Quality Dividend Growth Fund. It has a current yield of 1.72%, and it was the most consistent and steady of the funds on this list through the 5 years. But you could make an argument for any of these to be number one except II, which is, well, not as good as the others over the last 5 years. For comparison, here's a chart of all these investments over the last 5 years and what our $10,000 investment would be worth with our dividends being reinvested. You know, the drip. I'll pause here so you can take a long look at the goodness of these ETFs. Okay, I think we've paused long enough. Okay, now let's throw in IBHE, which has that great dividend yield onto the chart. Even with that great yield, it lags far behind all of the other ETFs. And finally, I want to let you in on a very hot ETF right now that I didn't put in my top 5, mainly because it's less than 2 years old. And what is it you ask that would be? It's JEPQ, JEPQ, which is JP Morgan's NASDAQ Equity Premium Income ETF. Another bunch of words there. Over the last year, that $10,000 investment would be worth over $13,500, and it currently comes in an astounding 9.73% yield. Time will tell if JAPQ can be at the top of the ETF list, but it is definitely one to keep an eye on moving forward. Well, that's it for this video. I hope by watching what we covered, it can help you make informed decisions on investing your money in some of the better ETFs available that not only have a dividend, but also boast a great return as well. And if you don't have an existing brokerage account or are looking for a new one, I left the link below to Charles Schwab, which is what I use. They have a wealth of tools for you to research investments so you can make decisions on how to allocate your money. As always, thanks for watching and hanging around till the end. Don't forget to like the video and subscribe so you know when I put out new content focused on your money and how to manage it best with a little bit of comedy thrown in for good measure. See you next time.